Hi, welcome back to the channel. Now, in the June stock market outlook, I'm going to walk through another really high level broader market overview of the US stock market. I will spend around 5 minutes just walking through the key major indexes, and as usual, I've got around 20 individual stock ideas for your watch lists going into June. Now, it has taken, as always, around 20 hours to prepare, present, edit and upload. I do hope you find a lot of value from my hard work, so please do smash the like button in advance. If you follow me closely on X, hopefully my charts have helped you in some way over the recent crash that we've had to deal with, and hopefully my work last month helped some of you. The numbers speak for themselves. There was a lot of performance, not just performance though, we had a lot of outperformance, which is kind of what we're all looking for. Now, before I get into it, for disclosure, myself or my clients may hold positions in some of the names mentioned, but I have highlighted disclosures on the charts. I think most of you know by now that I don't use any magical hindsight indicators. I timestamp absolutely everything, which is massively important for the field in which I work. I'm one of the very few who go on the record with their work. But before I get into all this, just for complete clarity, I'm neither a perma-bull or a perma-bear. I analyse the charts and the data without any confirmation bias and draw logical conclusions as well. But before I get into it, please do pause the video. Very, very important disclaimer. And like I said a minute ago, please do smash the like button, share and subscribe on social media with your followers. It really does help with the YouTube algorithm and really does help to get my work a lot more noticed. Now, before I get into the index charts, I just want to walk through the performance for May so far. Now, I am recording this around an hour before the market close on Friday. I think everybody can see from the performance, there's been a massive performance across the markets, not just within mega cap tech, which is up 8.7% so far for the month. What has actually caught my eye more than anything is the participation of the riskiest names. We're looking at the micro caps, which are up 8%. We're looking at the small caps up 5.5%. So I think what a lot of us have observed over the last few years is at the index level, the performance of mega cap tech often masks a lot of damage that's going on under the surface. I think with the rally that we've had over the last couple of months, it really has been a broad-based rally, which is very, very encouraging from my perspective, looking at things at the moment through a bullish lens. The markets around the world continue to communicate the same message. The German DAX is up nearly 6.5%. All country world index up 5.5%. But a really good gauge of risk appetite is obviously in the cryptocurrency space, and massive monster performance there from Ethereum. Obviously Bitcoin and Solana also outperforming the US markets as well. So we have had a broad-based rally. Now, to bring back into focus a few charts that I presented last month on social media, the thesis that I've been working with, that we're dealing with a V-shaped recovery. Now, there's a few reasons for that, but the V-shaped recovery that we had in 2020 resulted in a 120% rally over the next 21 months. Now, of course, I'd be highly skeptical of those types of numbers, especially in the current macro environment that we're dealing with. But at the moment, the thesis that I'm working with is a test of previous all-time highs. Now, the chart here just has the 40-week moving average. I think with the run-up that we've had recently, I think 16-17%, it's very, very logical to expect a little bit of consolidation, a little bit of digestion of gains, call it what you want. But ultimately, I am just hoping to see a little bit of sideways action over the next few weeks, and then hopefully another leg higher and a breakout to new all-time highs. Now, for some of you that are screaming hopium and all the rest of it, it's not just the US markets. I am using countries around the world as well. The German DAX is going out at new all-time highs, put in a massive V-shaped recovery. We've seen the same thing in Spain. It's not just around Europe. There are multiple countries across the world that are doing the same thing. Singapore very, very close to previous all-time highs. Now, whilst these are not markets I am personally invested in, I'm not massively interested in those countries, but the idea that the US markets can't do the same thing just doesn't make a whole lot of sense to me when I'm looking at what's happening around the world. So the longer term outlook that I have with the S&P 500 now, as this is the last trading day in the month, we are looking like we are going to close back above the 10-month moving average, which is a really good risk-on, risk-off indicator. If you had used it with the tariff crash, you would have bypassed, I think, 13 or 14% of the decline. So I am viewing this as another small positive for the market. Now, of course, it doesn't mean I'm not aware that the market can pivot on tweets and tariff changes, etc., etc. But I am working with the thesis that the worst of it is behind us, and we are dealing with hopefully the start of a new uptrend for the market. The VIX is back in the buy zone. We are under 20. Again, if you missed my analysis last month, if you don't follow me on X or on Stock Twits, I did post this chart in real time just saying, look, the VIX is above 50. This is an environment where you might want to consider starting to look at stocks to buy. Ultimately, it's provided yet another unbelievable buy signal for the market. Since then, we've had a massively historic collapse of the VIX. Obviously, with that environment, stocks across the board are moving higher. If there's one chart that I would urge you to replicate, if you are out there and you have your own charting software, etc., and maybe you don't have access to a professional, then certainly I'd encourage you to replicate this chart. When the VIX gets above 50, just start looking for stocks to buy. It doesn't mean everything's an automatic buy, but certainly you can scale in, I think, with quality names. But the charts, I think, for the major indexes, I have touched on the S&P already, but I just want to bring into focus the advanced decline. Again, it's been a relatively flat week for the S&P 500, but there is quite a large number of advances compared to decline. So it is, in my view, currently a pretty positive week for the market. I think the market's closing on a positive note. The triple Qs have exactly the same look to it, the 40-week moving average here. And again, I would just say with the indexes, you want to see these levels act as solid support. So this area around 500, if there is a little bit of weakness over the next week, you would want to see these levels hold up, because with my work, although I am working with the thesis of a test of previous all-time highs across the board, like I said at the start, I'm neither a perma bull or a perma bear. If the data changes, if the charts change, I'll pivot my thesis on 30 seconds notice. So I would just urge everybody to have some kind of game plan just for all eventualities. The Russell 3000, exactly the same look to the chart. Again, 40-week moving average. We'd like to see this area around 330 act as support. We've also got the Dow Jones Industrial Average. Again, not a big fan of a lot of the components of the Dow. I think a lot of the stocks are dinosaurs. I think they need to update the Dow, but there is potentially a catch-up trade there. But I do want to bring into focus a few charts that would have me also scrambling to the defensive side of the market. So the GDP, now GDP, we have the next announcement on June the 26th. Now, a few years ago, again, longer term followers will know that I went on the record with the GDP and the shenanigans. We actually had 2 negative quarters a couple of years ago, and they changed the definition of a recession. They fudged the data. You can speculate as to why. We actually had 2 negative quarters. But we've had one, as I'm sure a lot of you already know. And if there is another announcement of another quarter of negative GDP, then that would be a recession signal. So that's something to be aware of. I think if we do get that announcement, then, you know, from my perspective, it wouldn't surprise me to see algorithms kick into gear and selling pressure to ramp up. So this is a chart that I actually presented to my clients last week, just to prepare for the possibility, and also the bond market as well. I think the bond market, as everybody knows, has been dead money for years. There has been a couple of trades here and there, but ultimately if the market just falls away below these levels dating back to 2000, 2002, then again, that just might be in an environment where stocks are coming under a little bit more pressure as well. So yeah, this level here around 81 would be key if there is further pressure in the bond market. And I'll just quickly touch on a couple of commodities before I get into the good stuff in all the individual stocks. The gold chart, and congrats all you gold bugs out there. It's been a monster performance over the last 12 months. We have recently met upside targets, but I think you can continue to remain bullish above 3,200. We've also got the silver, which I think might be a potential catch-up trade, but the market just isn't confirming that at the moment. It's been on my watch list for a few months now. It's just not really confirmed the breakout above $35 that I want to see. I think if it can break out, like I said, I think there is potential for a catch-up, and silver can move like a growth stock for those of you that are fixated on growth names, but there is obviously quite lofty upside objectives to aim for. Now, like I said, I am about to walk through a bunch of stocks. If you are still here, it tells me that you're getting a lot of value from the analysis, so please do smash the like button. Like I said, it really does help with the YouTube algorithm. Now, a place where I just want to start is with Uber. Now, Uber is actually one of my high conviction ideas at the moment, which is off to a very lackluster start, shall we say. So it did break out a couple of weeks ago on solid volume and above Fibonacci levels. Now, it was going great, and then we've had the robotaxi announcement. I'm sure some of you are in the same boat that I am and not really sure if the market will hold up here or whether or not it's going to collapse. So I am just using this kind of support level as my line in the sand. I don't think there'll be a decision from my end today, but going into next week, if these levels are given up, then I'll probably just have to cut the position that I have and work on 93.60 as being a near-term high for the stock. But if there is a rebound over the next week from these levels, then I think a reclaim of that $87 level might offer opportunity to the long side. But it is a very, very pivotal level here, in my opinion, for Uber. I like Uber, I like the stock, I think there's a lot of positivity, but it is at the moment being hit by a lot of news announcements from robo-taxis, and that brings me into the next chart for Tesla, which again, one of our long ideas at the moment. Our trailing stop on this is up at 323. There is a little bit of toing and froing today at the moment. Obviously, I think there's tariff headlines again, which is kind of moving the stock. I am loosely working with, if you're into chart patterns, I'm not massive on chart patterns, I've got to say, but potential for a bull flag to develop there. But ultimately, the message this weekend to my clients will be just to remain bullish, provided we're above 323. AMD as well, I think AMD is potentially basing. Again, I think it's already put in a bottom, but I think we need to get above that kind of 115, 116 level again, which again I think will offer further opportunity to the long side. Now, NVIDIA earnings have got a lot of airtime over the last week. I think from my perspective, obviously I'm sure everybody's in the same boat. A lot of us will have positions in NVIDIA, I'm sure. For us, it was a no-brainer buy on the crash that we had. Since then, obviously, trailing stop losses up at 129. The pullback I think we're getting today, I think it's currently down around 3% on the day. I'm viewing that as an opportunity to buy the dip, with the caveat that these recent pivot levels and the trailing stop hold as support for the uptrend. I think Meta, again, very, very straightforward. 750 is the upside target. It has been consolidating over the last 3 weeks. I think if there's a further breakout of this little tight range, then I think there is a further 10% upside to be had there. Now, obviously, with my work, it gets a lot of attention because I'm predominantly looking for buy low, sell high. I like charts where there's risk to reward to the upside. A lot of the best stocks, in my opinion, have already based, they've already bottomed, they've already put in tradable bottom signals. So really it's just about identifying new entry positions within the ongoing uptrend. So with a lot of the charts, I have covered quite a few charts last month as well, so I am updating some of them, but there are a lot of new ideas as well. For instance, Microsoft testing new all-time highs, $3.4 trillion market cap. I think it's more than NVDA now. And I think if there's a further breakout to new all-time highs above that 470 level, then again, might be a level where we see a further move higher there. But like I said, a lot of these charts have already made big moves off the lows, which is always the issue when trying to identify new entries. But I do like C Limited. It's not too overextended. I think with a lot of stocks, if they are going to get back to their glory days at previous all-time highs, this is a longer term chart for C Limited. It's been working unbelievably well. Recent breakout as well in the back of positive earnings, monster 12 months earnings growth. And I think C Limited might make a lot of sense. Roblox as well. The target that we're working with there is up around $100. The RSI, I think, is a really good tool to gauge whether or not something's a little bit overextended, etc. The RSI isn't massively overbought at the moment. I probably expect a little bit of digestion soon, maybe a little bit of a pullback, but I think within an ongoing uptrend, especially one that's breaking out of big bases, pullbacks within an uptrend oftentimes offer opportunity. I think Roblox might fit the bill as well. Google also, I think there is still a bit of upside there in Google. The target that we're working with there with Google stock is around $192. So if I just quickly build in here where we are. So from current upside, perhaps another 13% upside. Big breakout in the last week for Intuit. Now, Intuit was actually put to my clients last week. That's a base dating back 4 years, a big massive cup and handle pattern. I do like chart patterns when they break out of extended bases. But the target that we're working with there is up around $1,000. Now, obviously the caveat to that is that the market doesn't fall off a cliff. But if the market does continue to play ball and slow grind higher and higher, then Intuit is breaking out of a massive 4-year base. Same with CrowdStrike. Again, massive performance off the lows recently. $300 it got as low as. We're up around $450. That's another cup and handle pattern dating back over the last 4 months. So new all-time highs there. Now, AppLovin is another stock that I'm very, very high on. I've actually been really high on it dating back to summer last year. If you follow me on X, you'll know that I was doing victory laps with this one. I actually posted this chart in real time and it ripped higher. But since then, again, it's been motoring very, very well. It's actually just met our upside targets here. But a further breakout there. I think if it can get above that 420 level, then potentially there could be another move there. We've got Twilio, again, potentially could be basing, getting ready to break out there. I do like it above that kind of 118, 120 area. Snowflake looks like it's breaking out of a bit of a triangle pattern on the back of earnings. Earnings looked a little bit mixed from where I was sitting, but yeah, I think if it's above that $200 level, then I think you can remain bullish on Snowflake. It is a stock that I've been recommending recently as well, but yeah, need to see this $200 level hold as support. One thing to note with Snowflake, it is outperforming the S&P 500 by 30% year to date as well, so it is a monster performer. Grab, I think you can add to your watch lists as well. I think there's a possibility there that it's basing. Now, I follow a lot of the big hitters and their 13F filings, etc. I'm sure many of you are exactly the same. Brad Gerstner at Altimeter Capital is very, very long and very big on Grab. Southeast Asian Uber, and yeah, I think if there is a breakout there, then there is again a potential that it could get going as well. Lots of questions on Amazon over the last month. It has been a decent month so far for Amazon. We are now closing, I think, above that $200 level, and yeah, I think Amazon, I think that there is a lot of upside potential there, nearly 20%, if it is ultimately going to go and test those previous all-time highs. Obviously, there's a lot of Chinese, tariff shenanigans, products, etc. affected, but yeah, for the stock price, I think if you're above $200, then I don't think there's any issues whatsoever. Now, I just want to bring into focus NewScale Power. Again, if you follow me on X, you'll know that I've been big on this for quite a while. Lots of folks have reached out to ask for my thoughts on it. For me, it's met upside targets. It's met my upside targets. What I don't like now is, with charts and CMTs and chartists, etc. What you tend to find is a lot of the CMTs like to highlight areas of the market and stocks that are moving after they've made hundreds of percents of gains. If you go and have a look at the ETFs for uranium and nuclear, they've already made 70% moves in the last few weeks. And what oftentimes happens is that it starts to show up on relative strength scans, and then you get all the CMTs jumping on, recommending it because it's now the relative performer. I actually look at things from the opposite perspective, and I look to sell into these guys. It's one of the things, again, if I like to have a little bit of fun with social media, and I see the same things happening with NewScale Power as well. I see a lot of folks starting to recommend it, just as ETFs have already moved 70%. So there's a lot of positive news coming out with the nuclear space. I get it, but I think it's potentially a sell the news event. So I'm looking at NewScale Power potentially as a near-term top signal. I think there's a lot of folks that are now starting to sell into these relative strength guys. So I think the pullback will ultimately offer opportunity, but in the near term, I am expecting a little bit of near-term pressure on a lot of the kind of uranium names. Hims and Hers Health. Now, there is the short interest keeps getting bigger on this one. Just to be clear on this, a lot of folks are now starting to bet against it again. Again, it has met our upside targets recently, which is great. But if there is a further breakout, if you go and have a look at the revenue performance of Hims and Hers, it's absolutely astronomical. If Hims and Hers continues to do what it's doing and kind of starts to scale up a little bit, I could see a wrecking ball getting taken to a lot of the shorts here. Now, you can have your opinions on the company. I'm more interested in revenue growth. Numbers like that are absolutely so powerful, and Yeah, if there's a breakout here in Hims and Hers, that 28% short interest, there's going to be a wrecking ball taken. Just go and have a look at, something like Carvana over the last couple of years and what that's done to a lot of stocks. So potentially, Hims and Hers, it's been a recommended buy of ours multiple times over the last year. And I think Hims is definitely worth adding to your watch lists. Also Palantir, exactly the same message. If you follow the channel closely, you'll know that I started presenting the chart for Palantir 18 months ago when everybody hated it. It did very, very well on it. Again, I think it's consolidating now in a tight range, and our target that we're working with there is up around 171. We've also got Robinhood, recently met upside targets. There is a very strong correlation with Bitcoin, so you do need to kind of have that stomach for volatility. But previous all-time highs there are up around 85. Got Netflix as well, continues to reward folks for holding the stock. Now with Netflix, I think I touched on it last month as well. With the price of the stock now up at $1,200, it wouldn't surprise me in the slightest to see some kind of stock split in the near future, maybe a 5-to-1, 10-to-1, something like that. But ultimately, the target that we're working with there is up around $1,500. I think as long as you're above $1,000, if there is any major pullbacks, you definitely want to see $1,000 act as a floor for price. Now we've had Dell earnings in the last 24 hours. Now I haven't dug into those earnings yet. The market seems to be a little bit on the fence just with the price action that we're seeing today. I'm simply viewing it at the moment the target is met. I think there is a triangle pattern here. I think if there's a breakout of this trend line, then ultimately 180 comes in as an upside target. As it stands at the moment, we'll need to see how the earnings reaction goes from here. But I think it's definitely worth adding to your watch list in case there is a breakout of that trend line. I did touch on the Dow. One of the strongest looking charts, I think, in the Dow. Very, very clean looking chart. Looks like it's potentially breaking out to new monthly closing all-time highs. Now, just to be completely upfront with everybody, this has been a recommended buy since the lows, just because of the cleanliness of the chart. I like to have charts where can demonstrate that key technical levels have a lot of merit. Not every chart is the same. I think it's the biggest problem with technical analysis. I see a lot of folks trying to use technical tools that don't really have merit for a particular chart. I think something like Travelers Company, we can see very, very clearly that Fibonacci works. Not all charts Fibonacci does work, but for me it's breaking out to new all-time highs, $62 billion market cap. Let's see what it does. Again, Mercado Libre, massive performance last couple of months. Again, the target that we're working with here remains up around 3,300. I don't see any reason for the time being to amend anything. Spotify, exactly the same. It looks like potentially going out at new closing weekly all-time highs. The target that we'd be working with there are up around 900. And we've also got GE Vernova. Again, absolutely monster performer over the last couple of months. Just recently met logical upside objectives, the Fibonacci levels that I talked about. Probably expect a little bit of digestion, a little bit of chop, but if you have a look at GE Vernova and also GE, you'll see that they're both moving. So if there's a breakout there above 500, then again you're probably looking at something there up around 700 if there is a further breakout. So if you are still here and you're wondering who it is I am and what it is I do, there is a link in the description. Feel free to go and jump on to our website at honeystocks.com. All of our transparent timestamp work is all laid out. I only use my own charts and my own data. But what we do is we provide access to all of our premium work. Now, what our memberships provide is access to our premium weekend analysis every single weekend, which provides all of our best charts and all of our weekend hot lists, all of our highest conviction investment ideas. I'll show you what that looks like in just a second, and also access to our 10-minute midweek halftime analysis. We also provide access to wonderful, highly intelligent community of professionals, investors and traders from across the world. Provide access to all of my chart books, which cover the most liquid stocks, ETFs and commodities from across the world. And if you're new to technical analysis, I also provide access to complete technical analysis program, which I'm told is very, very good and very, very well built as well. But just to quickly show you what our highest conviction ideas look like, very, very clear charts. Recent one for Palantir, GE Vernova, recent idea that went out as well. NVDA, massive performer. We've got Spotify again, monster performer as well. But I am very, very unique in what I do. I timestamp all of my work. All of my high conviction ideas are logged on the website for complete transparency. Please do check that the ideas that I like to recommend are the types of stocks that you like to buy. So these are our highest conviction ideas. I've done this, I've logged absolutely everything for the last 6-7 years. It's why I've got so many clients now, a lot of the major investment banks. So feel free to go and scrutinise that, check it out and see if it aligns with your own process. But I think generally speaking, I think my work is probably a good fit for you if you're midterm in your approach, you're looking weeks to months out. I'm not day trading. If you're someone who is consistently losing at day trading, you can't really make it work and you're looking for something a little bit more stable to fit with work, lifestyle, etc., maybe my work would be a good fit for you. If you're looking to build a systematic process, if you want to have access to successful community and a professional analyst, I am available for chart requests every single day. And maybe you're just sick of hunting around social media for ideas as well. Again, maybe my work might be a decent fit for you. But if you are still here, before you go, please do smash the like button. Thank you very much for watching, and I hope to welcome you soon. Thank you very much.